starting. All attendees are in listen-only mode.
Good afternoon, everyone, and welcome to session recap of 14 April 2014. Today we are going to have a nice setups, I hope so, and I think they will be good, on Euro Dollar, GBP Dollar, Aussie Swissy, and Euro Yen. Plus, of course, I will give my Dollar CAD view because I still see short trades around particular levels, and I will share that with you. So today, prior to our beginning of the webinar, we will just give a few slides about this disclaimer, and then we can continue. Online educational materials are developed by Admiral Markets AS Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting, conditions, and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Then risk disclosure statement, explain all the risks associated with Forex market, and by accepting it, you are also proceeding further with me. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author or me, and in no way it represents the actual suggestion for the trade. These are not AM UK's opinions, and the website in the video is not the .co.uk website, but the globalnews.com website. Forex is risky business. This should be not taken as advice. It's a personal opinion only, and this webinar is for informational and educational purposes only. So last week, summary of last session recap, it still was good. From anywhere to plus 40 to plus 105 pips when we summarize all the trades, potential trades we could have had. Euro Dollar alternative 1 setup gave us minus 15 pips, but alternative 2 setup gave us some 60 pips. GBP Dollar was a loss, counting for minus 50. Aussie was a trade of the week. Basically, it went out plus 45 to plus 100 pips. And Euro GBP didn't qualify for any entry in Euro CAD because the price didn't hit any of the levels I gave, and because of that, basically, we didn't have any setups. I also want to tell you that after the webinar, we had great setups, particularly about Aussie. If you follow Admiral Markets blog and Forex Factory, we had Aussie, we had Euro. Excellent trade here, excellent setup. Also, we had a bunch of good setups after the session recap. Aussie New Zealand was also very good. Euro Australian dollar was perfect trade to the pip. This was also for me one of the best trades. Euro Australian dollar, from this analysis, the trade was hit at April 8, just after our session recap. It was very, very good. But today I also expect some good movements, nice movements. But let's see a quick summary of last recap, and then we can move on to today's recap. So Euro Dollar, as we can see, after our webinar, we had basically two potential setups. First setup was basically, it gave us minus 15 pips. Second setup was good. As I told you, as long as Euro was at 37.20 or more, it will go, and it still has potential to go at 37.90. Euro Dollar was target price was hit, but at the same time, those who shorted at around 37.75 or 90 had a slight loss for 15 pips. Also, I will just I will pause the screen and I will show you slides so you can see what I'm talking about, because all of these webinars can be, of course, checked, and I always want to see it clear. So let me just open my last recap here. This is last recap. You can see it here. Euro Dollar. So alternative to trade, if is about 37, we may expect 37.60 to 37.90. This sell particularly was a loss to the pip. Unfortunately, basically, the first jump at 38.05 was a loss, even though then it went down for a scalp trade, but I count this as a loss trade. We didn't get any primary sell position at breakout pullback continuation. GBP dollar, unfortunately, I was a bit surprised by this move, as it was triggered by the news, and this news was very, very strong, and sell trade at this level was stopped out. Basically, it was stopped out. I counted this as minus 50 pips of profit because of this 63.60. It was minus 50. And to be honest, I was a little bit surprised. We can see the trade somewhere around here. You can see this was the time of our webinar, and look, tomorrow after the news, look at this swing to the upside. It was very, very big. This is bullish candle, and you see how far it went. So it was a loss. Trade of the week was, of course, Aussie. For me also it was trade of the week. Buy 93.15 towards 93.50, breakout, pullback, continuation. This was breakout, this was pullback, retest, and continuation just after this point. And you can see how the price violently went. It stormed through 50 level, and it even went for some 150 pips of a profit. But well, we had some nice targets around 93.50, 93.75. Although it was very, very fast trade, and that was a sure trade for Aussie. Breakout, pullback, continuation trade, and the target was hit. Then Euro GBP wasn't qualified. Both of those levels didn't qualify, unfortunately, so I cannot take this trade. We basically didn't have any setup. Also, the same was for Euro CAD. Unfortunately, we didn't hit any setup, because how it works, when I put these levels, when I present it to you, usually those levels will be hit anywhere from today till the day after tomorrow. So they are basically valid for 2 days, this day, tomorrow, and sometimes the day after tomorrow. And sometimes we will get a price, but sometimes, most often we will get a price, but sometimes we just do not get the price, unfortunately, and then we cannot count that trade. Euro CAD, unfortunately, wasn't hit anywhere. I thought that we could have got some in next few days. I thought that we could get some nice trades, but unfortunately, you see the price was ranging. We had two possible setups: sell around 51.30, buy around 5000, and the lowest low we had was at 9th of April. It wasn't very close to 5000. It was 5022. I usually give my prices and my analysis 10 pips of breathing room. So if it hits anywhere from those 10 points, we can basically take the trade. But this was 22 pips far from our entry price, and basically it was very good, but it wasn't qualified. Although, guys, if you pay attention to this setup, it was 3 days after, but still you always should refer to the analysis. It was sell around 51.30 to 50. Even though if some have taken the trade around this level, as I said, this was a nice level to go short. You could have got some 35 pips to the downside. Still, it was 3 days, so it was basically a day. It was tomorrow, day after tomorrow, and the day and 3 days after. So basically, I waited for this setup. If this setup had been hit at least 1 day before it was actually hit, we would have had taken the trade as plus 30, because 3 days after the price went to this level, 51.30, 51.50, you can see it here, and it was a great trade, nice counter trend trade in this case, for some 33 pips maximum. So even then we could have got some 20 pips at least from this trade setup. Unfortunately, we couldn't have got into this setup. Some of you may have taken that if you refer to our webinar, but fortunately it wasn't hit. So Euro CAD, Euro GBP weren't qualified. Fortunately, look at this Euro GBP. Very range bound. Usually Euro GBP is range bound, but this was too much of a range. Today, we will see setups on Euro, Dollar, Cable, Aussie, Aussie, Swissy, Euro, Yen, and Dollar, CAD overview. I will first start with Aussie, Swissy because I think I may be up at for this trade very soon. As you can see, I also put it on Aussie, Swissy daily analysis. We had nice confluence around 82.55. I would say now around 85.55, 50 level. We also have a trend line which is making the lower part of the triangle. Also we have a trend line valid which was formed in above H5 level, so I won't pull back to this level. I would use 35 pip stop loss and I would go for this level 1, 2, 3 trend line, possible trend line touch. So I would go first with this setup if I get the chance. 82.50 buys, stop loss 30 pips, targeting 83.30, 83.10. I would of course use trailing stop after some 15-20 pips of a profit. Then sell at 83.11, 15 pips trailing stop. If we don't get the trade, this trade we may see first a short setup. So I would look really to sell around this region, but primary trade I would be happy with this because H4 now on Camarilla stands as a breakout point, and basically I think that we might have a nice trade on a pullback towards this level. I don't say it will be hit, but if it's hit anywhere from 5 pips to my entry level 82, 55, 50, I would take this trade. So that is for Aussie Swissy. I'm really looking forward to this one. And it's close. Now it's 15 pips close to our entry point possible. Euro dollar, what can I say about euro dollar now? Of course, I have, it's possibly started a downtrend based on moves which were signaled during the last weekend. And I'm looking to sell on pullback, breakout pullback continuation pattern around 37.80. I would be looking for a target at 37.20 and 37. Why? This is very simple for me. Euro dollar, look at this. What does it tell you? What does it tell you? Does this make a valid trend line? Yes. Does we have a space here? Yes. We don't have any big history. There is some history of buyers here, but below this level, 37.80, there is a history of sellers, because last time when we hit this level, it was breakout pullback continuation here. I expect it also now. History repeats itself. Forex is an eternal wave. It always goes up and down, and I always base my trade also on history of buyers and sellers. In this particular example, we have a history of potential sellers there. Look at this. We may have some sellers, nice sellers in this region, and I'm looking forward really to it. I'm not sure if we will get a trade soon, but maybe based on fundamentals and anything, we can say that we may have some nice trade going there, possibly nice trade going there, guys. So we may see possible breakout pullback continuation trade around that particular level. 37.80. I'm eyeing that level for a particular short trade. So also you guys should pay attention to it. Okay. Then alternative trade on euro dollar is sell around 38.50. I would go for a sell around 38.50-60, stop loss around 39.10, targeting 37.80 if we don't get the opportunity to sell. So breakout pullback continuation for a sell, or a higher sell maybe if we get the opportunity. Just after this level we have a history, we have a gap, the gap was closed, but the history says at this level we might see some sell-off. So at this level, of course, I would go for a sell if we hit the level. I always say if we hit the level. I'm not saying it will be, but if we hit it, I would be selling. But first, for a sell, I would be really looking for this 37.80 breakout pullback continuation to the downside. I think it might go for 37.20 after it retests this zone. This is for euro dollar. For cable, I see a sell around 67.30.40, stop around 67.70, targeting 60.65. Now it's the time to sell if you're selling. I'm not. Now the problem is now we have a. It's the end of the day trading. Look at this. We have also trend line here. It started up basically and downtrend something around this zone. When this zone was broken, I can say the downtrend was started. So now I am in the trade. I don't say you should be in trade. It's only 30 pips of a stop loss. So if I get stopped out, my risk on 30 pip stop loss is 0.8 for this trade. 0.8. So it's really, I sold this around 67.40 on my real account, and I'll be looking for a sell towards 66.65. I will be using trailing stop after some 20 pips. If I'm stopped out, I will only lose 30 pips. So it's not that much. That is my view for cable, or I would be looking for a buy scalp around 66.50, 50 pip trailing stop. This trade was activated now, so well, what I can say is I'm in the trade. I don't say that you should be in the trade, but that is my analysis for cable. It's a low risk, we're really a low risk trade. Low risk trade. We have also double top here. You can see double top here, double top. Then we see a breakout of this level, basically a retest, and price was going down, broke this low, and it's trying to hit this level 66.80 before it goes to 66.50. So my eyes are on this trade. I will leave this trade whatever it happens, trailing stop after 20 pips. Then Aussie. For me, situation on Aussie is clear. 93.75 potential buy setup, breakout, pullback continuation towards 94.50. This is a mistake. This is not breakout. This is retracement. Why retracement? Because we have an Aussie, a possible retracement towards the zone. 93.75 red level, 93.75 trend line breaking through the level. As you can see it here, we can also make a Fibonacci retracement from this swing to this swing. As you can see, guys, 93.75 stands 10 pips difference. 10 pips is allowable between trend line, which stands 3 pips and 7 pips between 93.75. So 61.8 retracement at the trend line and 93.75. If I get this level, I will be looking to buy again. So that was the trade for Aussie. If we get a trade, or if we don't get a trade, I would be looking, this should be like this, I would be looking for a possible sell entry. Sell entry would be around 94.30. This would be the zone for selling into. Why? Because we have also trend line. You can see an inner trend line, the inner trend line which was already broken to the downside. Look at this. But we also can see a trend line as this. So basically, if it goes above this level, it will collect some stops. It can make a double top here. This was had the shoulders left, had right shoulder, and at 94.30 I would be looking to sell. So alternative setup is 94.30 pip, 15 pip trailing stop towards 94.00. Because usually when we get a violent price action, it won't stop, it will hit the zone, it will go collect some stops, and it can be rejected again towards 94.00. 00 level is always always natural support resistance levels. Now a question, isn't it a triangle or Aussie? Yes, if you look at this level here, a triangle. But what triangle is that? If you look at this pattern, this is a bullish flag, but this is also a triangle which happens to be at the uptrend. So this is a flag, this is a sort of a pole, this is a flag, and you can see the triangle flag, it's narrowing through its vortex. So if it pulls back here, I would be looking to buy it. It's simple as that. I would be looking to buy it. 93.75.85 is great place to go long, and I will be looking to go long at that zone. Alternative, if we get the sell opportunity, this will be my selling zone because of history of seller, right shoulder history. Then we have a lower low, then we have again a low here. This is a shooting star, so I want to see it somewhere around 93.6 of the retracement in upswing to sell it for a scalp trade. This alternative setup should be treated as a scalp trade because it has 15 pips stop loss. After 10 to 15 pips, you use trailing stop or you close the target. You close the trade. Primary setup is 75 to 85 if we happens to get it, and towards we need to see a retracement towards this level to 94.50 for a target. I see this as an uptrend. I already said about Aussie Swissy, looking to buy around 82.50, stop loss 30 pips, 83.10 target, or sell at 83.11, 15 pip trailing stop. I can say sell around 83.11. 83.11. I already explained my possible setup on Aussie Swissy. I will be looking to sell into or to buy into in this zone, this region. Now, what can I say for Euro Yen? I would be looking to sell at 141.15. 141.15. Why? Because if you see this chart, 61.8 retracement stands around that zone, and that zone will make a nice trend line if we happen to get it there. Also, we have a trend line, inner trend line there. Look at this. This is inner trend line. Why inner trend line? It's called because it's already been broken. Breakout, pullback, and form of continuation. This inner trend line serves also as resistance, but that resistance is protruding, is thrusting to this 61.8. 61.8 Fibonacci is golden ratio, and on Euro Yen it can give us cues for additional selling. So if it gets there, I would be looking to sell. Stops are not that big, 35 pips around 14.1.50. So 14 or 141.50, targeting 140.60. Okay, that is my primary trade. If I don't get a trade, I would be looking to buy scalp around 140.10 to 140.05, 15 pip trailing stop. Why I have chosen that level? Because of history of buyers in this region. There is a history of buying. Look at this strong buying. So if the price gets there, it will be bought for some scalp. Okay, you always need to pay attention to history of buyers and sellers in the region you want to buy or sell into. Okay, there is a history of buyers there. There is also a retracement possible there. But I would be looking, really, I would first look to see if it gets to 141.15, because we have inner trend line, we have 61.8 retracement of the last most prominent swing low. Finally, my view for dollar CAD, I would be looking to sell around 1.1010 to 1020, stop loss 1.1080, targeting 1.0880. I would be looking to sell dollar CAD. Dollar CAD is a potential trade for me around that zone. I will show you. Look at this. This is a rounded bottom, and this looks like inverted head and shoulders here. Left head, right. Even though it wasn't a perfect right shoulder, this pin serves as a right shoulder. So we can say this is inverted head and shoulder, rounded bottom. But if the price gets there, also this can be left, this can be head, this can be right shoulder. So guys, I will be looking to sell at this region. Look at this. Look at this. 1.010, 1.015 prior bottom and the selling zone. Look these wicks here, here, there, there, there. History of selling in that region. Look at this history of selling here. So I would be looking, of course, to sell into that zone if we get the price. If we draw a Fibonacci level from here to here, we can see that basically 78.6 made a top, a prior top here, and this zone stands in between. So I assume that it can be traded here, but also stops should be put above this zone, because if this zone is broken, it might go to test this level again, this zone here. So because of that, I want to see it here first, then I would be looking to sell it. So this is my position, the only one I plan for dollar CAD. Now, if you don't mind, I will give you the slides again, so you can print screen it if you want, and these are the setups which I want to see soon on these pairs. Euro dollar, cable, Aussie, Aussie Swissy, Euro yen, and dollar CAD. Dollar CAD is the only trade which has a slightly bigger stop loss, but you know, when you have a bigger stop loss, you need to lower your risk. So if my risk on 30 pips is 0.8, my risk on 70, 80 pips stop loss would be 0.2, 0.3. Okay. Lot sizes are also calculated by your stop loss. Dollar yen, I can tell you what I think about dollar yen, no problem at all. I would be looking to sell around 102.50. This is dollar. I can do that. I know that I have that level in my head. I would be looking to sell, really. What is this now? Tell me, what do you see at this chart? This chart is, now I don't have my Camarilla MACD template in front of me, but I remember some lines and Fibonacci which I draw on my Camarilla MACD template. Look at this. This is, guys, technical for me. We have, basically, we have at this region 102.50. We have a history of selling, we have a history of selling, we have a history of selling. These peaks have not made to close above it, so rejection, rejection, rejection. 1, 2, 3, 4, 5, 6. 6 rejections of this zone. Last buying attempt was killed by this big candle to the downside. So if it pulls back around this level, I would be looking to buy with only a 30 pip stop loss. So dollar yen for me is this trade. So I will be putting up like this, dollar yen. I would be, my trade plan is sell around 102.50, stop loss 102.80, targeting 101.80. Of course, after 20 pips, I would use my trailing stop. So this is also for dollar yen. Now, unfortunately, I cannot analyze euro dollar. Maybe, Ante, I can do that tomorrow. I will write it down, and I can do it tomorrow on Admiral Markets blog at Forex Factory. Now, really I already analyzed some of this, and I need really my Camarilla MACD. I did that dollar yen because I remember the lines from Camarilla MACD. Camarilla MACD is a method which I use for trading and for analysis, but if you ask just for Camarilla, Camarilla is indicator. Camarilla levels is indicator which prints out very good and very accurate pivot points and buying and sell levels during the day. And we use Camarilla for intraday trading. I use, of course, Camarilla levels along with my Fibonacci zones, trend lines, confluence. Yeah, Camarilla is a free indicator. Camarilla MACD is not a free method because I teach it. I teach it also. I did that on Skype, but you know I have my own website, elitecurrency.com. That website is a great one. So you will have a free system there, and you can always apply for a course. I will write it down. This is my website, and soon all of the videos will be uploaded. And starting from tomorrow or the day after tomorrow, it will be possible for you to apply for a course. After you download videos, which of course those are paid courses, you will have 2 free hours to talk with me about systems and about anything which is not clear or which you don't understand during the course. It's very, very, very easy. The site is www.elitecurrency.com. I wrote it down, currency, but you don't, it's C-U-R-R-E-N-S-E-A, currency, C as C, not as C, S-E-E, it's S-E-A. I wrote it down, so elitecurrency.com, and yeah, it's a word play, and you also have a free system out there. It's a very good method. I was selling the system during the time for 400 euros, and you can download it for free because you know, when I made Camarilla MACD method, I basically trade only that, but I never forget good methods and I never forget good system which I traded back in time. The biggest advantage of Camarilla MACD, you can see it here also, all of these setups which I've been giving constantly to you, and all of those setups which I've been analyzing on Admiral Markets blog, on Admiral Markets blog, on Forex Factory during last 3, 4, 5 months, they're solely done by Camarilla MACD method, and that is the only method which I use for trading and for the analysis. And the thing is, that is why I know what to do in order to analyze and trade all 24 pairs. So 24 pairs, 23, 24 pairs is what I trade basically, and I'm not stuck on euro, dollar, or anything particular because I have the freedom to analyze it and trade it. Dollar CAD, this is dollar CAD, this is dollar yen, euro dollar. I can do it tomorrow on a Forex Factory and Admiral Markets blog. It's a bit of time consuming, you know, when I present this to you, it looks easy. It is easy for me, you know, it's not that hard, but it's time consuming. I need to see Fibonacci ratios, I need to draw double Fibonacci, I need to see trend lines, I need to see Camarilla, I need to see history of buyers, the sellers, and you know, chart patterns, triangles, inverted head and shoulders, different formations which you use for analysis. Because you know, when you see the analysis and trading is not the same. When you do the analysis, you need to apply a trading method, and then by applying Camarilla MACD trading rules, I enter or exit the trade. So it's not that straightforward. Analysis is one thing. When I do an analysis, you might trade another system, but also if my analysis agrees with your system, you have double chance to be profitable, right? So basically that is how I do it. So those are simply the rules for these sessions, simply the rules. Whichever of these setups hits first, I usually trade it. So if alternative setup, if alternative setup kicks first, I would trade it first. If this hits first, I would sell it first. I would trade it first. But of course, position trades are usually better than alternative trades. Why better? Because they have potential, because those are trend trades. Usually, there are potential to give more pips than alternative. Mostly alternative are scalps, and those scalps are very successful, but they give us usually 15 pips. So those are the things which I wanted to share with you. Okay, so Aussie cable, Euro dollar cable Aussie, Australian dollar Swissy, Euro yen, dollar CAD, and dollar yen setup. We have plenty of chances now to look for and to trade for. Of course, apply for a premium webinar, ATR Stop Pro Indicator. I will be holding the webinar on April 27th. I will be giving you the indicator which I use for determining ATR stops. The indicator is great. It serves me perfectly fine, and it's very accurate. I'm giving you for free because it's a premium webinar, and you can use it to your advantage. For me, it's a necessity to have this indicator also. Also apply for weekly Forex recaps, expert opinions, Forex recap. On 16th of April, day after tomorrow, we will do that price action trading 4. That was the system which I presented you in last price action trading, and many of you wanted to get along more with this system, to know it better, and this call session will be dedicated to that particular trading method system. So guys, always nice free analysis charts on Algorand markets, outlook also on Algorand markets and Forex Factory. And if you don't have any further questions, we can conclude the webinar. If you have any questions, you can ask me. Thank you, T. Thank you, Lo. Thank you also. You're welcome. So let's see what we will have from all of these potential setups. So don't trade just one pair. Try to trade 3 or 4 pairs. You will get more chances for winning. At least as a beginner, begin with 1, expand to 3-4 pairs, and then go to 24 pairs when you become professional. Thank you, Dragon. You're also welcome. And okay, guys, if you don't have any further questions, I like to tell you a quick resume of these setups. That is why I talk so fast, because who knows, maybe while we talk we can hit some setup. So pay attention to this, mark it on your charts, and let's see what we will get. This is a little bit of how can I say, euro dollar is very nervous, but I would be looking forward to this position sell. If we get the sell around this level, that would be good. I think we could hit this level. So primary, this is it. So thank you for attending the webinar. Be sure to sign up for more free stuff, upcoming webinars, and thank you also, and talk to you very, very soon. Cheers, guys.